Can anyone hear me? Can you guys hear me? Good. You can hear me clearly. Okay, cool. All good. Perfect. Perfect, perfect, perfect. So let me just make sure that people would hear on the recording side. Okay, we're recording. Good, good. All right, let's get it started. So let's go over that price action when get everyone to mute. Got ya. Got ya. All right. Double sound? What you mean by that? Okay, cool. Oh, leave the Discord. Let me do that. Let me do that. Yeah, this is all over the place. All right. So let's go over that price action. We induced above those highs. A lot of people were trying to look for sells. I honestly don't know why. There was no reason to try to catch the extreme of this. So let's go into that. So once we traded above these highs with this impulsive move, we saw the fact that we induced buyers. Yes. So we need to wait for some sort of build up or buyers to get trapped to end up taking some sort of continuation because we had premise to go above these highs. Even Marco dropped a market forecast insinuating we can enter his price above these highs. So let's actually refine this here to this high. Let's refine that there. Okay. So let's go over this. We trade into this area and look what we do. We create a buildup, like we always say. So we create a buildup, we react off of that area, and look what we do. We induce buyers. So since we induce buyers after reacting off of that area, we know that buyers are trying to buy this market. So since we know that buyers are trying to buy this market, we want to wait for this liquidity to get clear because essentially we like to see this happen for an indication that early buyers are getting into the market, which validates us having a build up here. So therefore, buyers get trapped, sellers get induced. So we do not want to be selling from these highs. We do not want to be selling from this high. We do not want to be selling from this high either. So we built liquidity here by price respecting that area and moving away. So we could see this as a potential point that price could return back to. Price returns back to that area. And let's go to the 5 to really dissect that price action. Let's dissect that price action. So here's what happens. We sell off, and now what we do is we trade into this area. So, like I said, remember, we do not want to be selling from these areas. So we want to see price give a reaction. Then again, we want to see a buildup. Since we took out this high, since we took out this high here, we need to see the same thing happen. We need to see a buildup and buyers get trapped, sellers get induced, so we can have some sort of liquidity to get to target in the market. So here's what we have here. So very intricate, like we always say. We trade above this high, respect in that area. Look at that. So we respect that area and we trade higher. So notice how we trade higher. Therefore, we have a buildup here. Price still respects here, inducing early buyers. They get trapped. Remember, in our concepts, we do not trade with this price action. We do not trade with structure. This is essentially SMC trap, you know, a demand zone that price reacted off of, traded higher. We do not like to trade from these areas. So now, once we get that buildup taken, we have induced sellers. And notice the fact that we induce sellers off of the back of this, guys, off of the back of this reaction here. So off of the back of that reaction, we induce sellers. Therefore, we have liquidity above these highs. We have liquidity above these highs. So how can we potentially get into this trade? There's plenty of ways we could get into this trade. So on the 5 minute, if you were looking at the 5 minute perspective, without even going to the 1 minute, you have two opportunities to get into this. So liquidity block down here, we respect the inducement high, therefore giving us a reason, a higher probable reason why we should be getting into this trade because we respect this area and move away. So therefore, I have total conviction in taking this trade. You can take the trade here. As soon as this low goes, that would be considered a confirmation entry, yes, but also a safer confirmation entry to where you wouldn't need to wait for as far as the inducement low extreme to be taken out or the inducement from the left. This is a safe entry just in case if you were to potentially miss, say if price just reacted off of this low and then flew away. If you were waiting for something lower, this would have been the most conservative entry. So you could have taken an entry there as soon as that low was taken. But let's go on the 1 minute to see what entry I was able to capitalize on. This is not the 1 minute? Oh, man. Jeez, I gotta scroll all the way back, guys. Okay, so so here's what we have here. Look at this price action here. We have an inducement low. Notice how we get that reaction. It's so intricate, guys, but I've been able to train my eyes to see this in live time. So you see how we get this reaction here, that bullish move up. We induce buyers there. Therefore, we want to see price below this low. I have a liquidity block below. Also, another confluence gave me this. We had a pause above this high. We had a pause. Notice how we react from there. We get that pause in the form of this bearish candle. We take that high. Therefore, we have an inducement low. I want to see price return back to that area. And then we do so by respecting this. So once we respect this, we move away, inducing sellers, taking that inducement low. So therefore, we leave liquidity at these highs now. So that gives me total conviction in taking this entry. My confidence is high on taking this entry. Even though, it's at the extreme, I potentially almost got stopped out. It really doesn't matter to me. My confidence was still high taking this trade. I was able to take it on CFDs and futures. So you can have a partial point at these highs or a manage point, whatever is best for you in your trading. Me personally, I'd manage above here. You have a target point here as well. Me personally, I was okay with targeting this high on futures just because once I see this happening, you see this pullback, I don't want to be taken out of a trade, especially a one that I was able to squeeze AR out of. So therefore, I would hate for price to come back and tag me out break even without taking some sort of, partials or anything. So here's what is another target point. And also don't forget those highs that I told you that price, we're still not looking for sales from. We're still not looking for sales above this high because we induce sellers at these lows. Therefore, we could return back to these highs, another target point there. So you have that target there. And then I would potentially be 90% out of this trade if I took it on CFDs, which I did. So if I was to then say, let's swing this position, where would be my next target point? So let's go to the 4 hour. My next target point for that swing position would be these highs. Remember, I'm only running 10% left from partials off of this trade. So look at the potential you could snag off of this potential trade that was caught on the lower time frame. Just off of knowing what the direction is on gold, you were able to capitalize on that. So Let's go here. Let's go here. Let's try and see what gold does after the fact. So we take out those highs. Let's turn this into a line and not a horizontal line. So, so we take out those highs. Notice how we react from these areas and induce buyers. You just grab the whole area right here because essentially price is reacting off of this. So yes, it's a liquidity block, but at the same time, we do not want to be trading from these areas because this is our inducement low, and this is where buyers are getting induced from. So as you see, we tap into that area, induce buyers again. So now we have a buildup confirmed. Since we respected that area that retail wants to trade from, we do not want to be trading from this area. But price doesn't come below it yet, so therefore, no potential trade for me. This is how you keep yourself out of low quality positions. We react from the low. Nothing, nothing provided. This is price action that you want to stay away from. Right here, there's nothing valid for the setup or for the system. We just trickle up to the highs, and then we finally take that target. So gold just started flying as we see. So let's go over price action from the last couple of days. So since we know that we've taken out that higher time frame target now, that means we've induced buyers and we have trapped sellers. So now we pivot, remember. So since we pivot, we need to see where is the next potential point of liquidity, what happened in the market. So we get this crazy sell-off in Asia, crazy sell-off in Asia. Let's see what it's taken out. So we have taken out some sort of internal here. So we've taken out some sort of internal and we're reacting off of this LB. So since we're reacting off of this LB, we know that we could potentially induce buyers and respect this LB because there's no liquidity below this low essentially at the moment. So therefore, we can respect that area and induce buyers. And then after that, we'd get more clarity on what price is doing. So these are potential conditions where it's kind of hard to really map out where direction is going to be next. That's why you have to play it step by step and really wait for the most probable um probable conditions to set up. So in my idea of probable conditions to set up would be, for one, we have no engineered liquidity at the highest to target in the form of a buildup. So what we do is we induce these sellers. So let's look at this. We induce sellers. So therefore, we have an inducement high here. We can agree that from that high to that low, we just taken all this buildup out. So we want to see price above that. Also, if you want to train your eyes to see it better, look at that. We've built up at this low break structure. We want to see some sort of build up into this area. So what happens, let's dissect this price action on a lower time frame actually. So once we take out the low, we start to have a build up. So look at what price does. We respect this area here. We respect this area here. So that confirms we have a build up because what do? We induce buyers by moving away. We've taken out this high. Notice how that high was the last point before this low was taken. So you see how I marked that out? That high is the reason why we've taken out this low. And we respected this area to the left, which is an area we do not want to be trading from. That's our inducement low. POI for SMC to be taking a trade from. They get in profit and then they get trapped. So once they get trapped, this is where we're looking to potentially get into the market. Let's see if we were able to. Me personally, I wasn't looking at gold during this time period just because of the fact that I've already extracted what I needed from gold at the time. And like I said, this is just conditions that can get a little tricky. So look at what we react off of too. Ask yourself, why did we induce sellers here? And look at this type of price action we get, this buildup of price action. Trend line, like price action. So here is what we have here. We get this trend line like price action. Why do we induce sellers? Notice the reaction from the left here. We react off of that area. As soon as we take this low, we have liquidity above that high. So now that we have liquidity above that high, we can now say in lifetime, if we're right here, picture picture none of this has happened yet, right? We want to see how can we get in a potential entry at these lows. So let's try and find that. Okay, let's go to the 1 minute, 1 minute, 1 minute. So let's see if I can find something. Okay, so here's what we do. We induce buyers by taking out this high. Why this high specifically? So this was the last point before we just had this sell off here. Some could argue if we look at this low, this was the last reaction point. So it's really attention to detail to spot these things. So like I always say, this is the last part that price reacted off of from this area. You could refine it to this. We've induced buyers from there, but this little candle here is the last point before sellers got induced. So we take that. Now we have a BOS in the market because that would essentially be our inducement high. So we do not want to be trading anywhere above this low. So we see that low taken. Me personally, I would have wanted to see price do this. It probably did this on it probably stabbed below on futures, but this is the CFD chart, so I don't know what the futures chart looks like though, but we're just gonna play by ear here. So we respect the lows. Therefore, I would not be in any trades because we essentially respected retail. I would want to see price reinduce below the low, and then we get some sort of confirmation entry here. And in any event, there's nothing valid for me to take here. All we do is respect this high. All we do is respect the high. So we respect the high and trade into this low. Nothing really valid for me. Nothing I would take. So then again, we still have clear direction here that we have liquidity above these highs. We weren't able to dissect any sort of valid entry to get to these highs, but the direction is there. So a lot of times you're going to be very keen on your direction, but there's going to be times where there's no entries provided. And that's just how it is. So a lot of times me, Abid, Marco, and Adam are able to navigate these conditions where, direction is clear as day, but, we get also price action where we're not provided an entry where it's respecting areas we don't trade from essentially that follows the system. So after we take in those highs that we built liquidity from, we trade into this inducement high now. So now we have a buildup because we've taken a low and then we induce higher at the end of Thursday. This is getting into the form of bank holiday price action. So not really much we can really do. So once we see this take this high, I would potentially want to see price come lower to these lows. And then we can potentially take a trade into these highs. But gold, not really much besides that one move that we went over earlier. So let's shift to NQ. Let's shift to NQ. So let's see what we have here. Dissect this price action for you guys. So we can agree that we've taken out liquidity here. Let's clear our drawings. We've been talking about this area for a couple of weeks now that we've wanted price to trade below. We finally trap buyers, which induces sellers into the market. So therefore, any form of looking for sells should be high risk until we're provided any sort of clarity in that aspect. So everybody can agree that we induce sellers here. So we do not want to be selling from these highs. So on what was the day? On Wednesday, when price action was in this daily candle, if we're in a scenario like this, we can expect price to react off of this area and we want to see price induce sellers. Therefore, that builds us a narrative now that we have liquidity above this high. So let's actually replay it so you can picture yourself in a scenario. When we're in a market environment like this, we induce sellers, we take a low from the left as well. And we have an inducement high in the market, but there's no form of liquidity yet. We need to see, we want to anticipate actually price inducing sellers taking out some sort of internal to give us, framework that we have liquidity above here. So let's actually unreplay this because, it trains your eyes when you don't need to see replay. So we react off of this area now. And if we want to refine this, like just to train your guys' eyes to see this, here's what I saw, right? So we took a form of internal here. We've taken internal, and we also have a liquidity block here that we're reacting off of as why price has done this. Let's so we're reacting off of this liquidity block here as why price induced sellers. Now, hard to take a counter bias trade because the only liquidity in the market as far as a buildup would be these lows. See, you got that like build up like price action before we take out this internal point. So me personally wouldn't be taking this trade. I had a limit though in New York, but price came to this area at, like in the times where I don't like to be looking for any trades. So therefore I took my limit off and look at how price just runs to this target during Asia. So not price action I like to involve myself in. So therefore, remember, we've induced sellers now. Now, what do we have above here? Liquidity. So therefore, we want to see this happen where we get buildups because whenever we get this price action where we react off of this level, we induce sellers into the market. We have liquidity above the highs. Now we have a buy target. So coming into what was this Thursday? Let's go on to 5 actually. Coming into Thursday, I wanted to at least see price above London highs. Then London highs was above here. So we can agree that from this area, we've reacted off of it. And we've also induced sellers by reacting from this area that sellers were selling from and taking out the low. Therefore, we know that price could potentially return to this area just because of the fact that we have respected highs. And let's also look at this. So once we trade below that area, here's what we do. My favorite type of setups, like I say in every webinar that I do, we react from the inducement high and look at how we do not take it. This will improve your strike rate, by the way. Look at how we don't take it. We respect it though. And what do we do before that? We induce higher and then we trap those buyers. So many people will say, oh, why didn't you take the entry as soon as this was taken? There was no liquidity yet. Where's the liquidity? There's no liquidity yet. All you did was trade up and then come down. So there's essentially no liquidity. And look at this. This is not my time window. 9:10. I'm not taking trades at 9:10. I'm forecasting at 9:10 though, but not taking any trades. So we respect that area. Respect. And then we want to see price below this low now because that essentially induced buyers. As soon as that low is taken, as soon as the low is taken, take your buy. Use the whole area because the whole area is essentially a liquidity block. So to cover your stop below the low. My target was here at London highs, and I was more than happy to be out by then. I seen a lot of people. I think Nunya held this trade even past that. A lot of people could have held this trade all the way above here, which is insane. Would have literally been an insane start to April, holding this position for a 12 hour on futures. Imagine you're taking this trade with no consistency rule on your fundeds and your copy trading. Just off of that one entry, you catch the low of the day. Let me see the chat. I have not been looking at the chat. Is it risky to take a direct entry after taking out the inducement low? Chris, give me an example. What are you talking about exactly? Because you're probably talking about price action I went over. Gold. Okay, give me 1 second. Because since I'm done with NQ, I could potentially go over that for you. Let's go. Um, Tell me what time frame to go on. I'm trying to see the exact scenario you're talking about. There's APA. Great. Um, are you talking about this here? Let me, as soon as this low's taken, take the entry. I mean, you can. I don't know if it fits the RR though. It depends. So in this area, I wouldn't take it because me personally, I would have wanted to target this area only. I w- I would have expected price to have a build up from these areas again. So therefore, I wouldn't be targeting this high. But you can. It's not wrong, but I would like to just be out above here. So like I said, whenever conditions aren't as clear, I would like to get in and out the market as fast as I can whenever I see these points of liquidity getting taken. So it's not invalid, but I would say it would be higher risk to essentially target that. One could justify though that if you look on a 15 perspective without refining it, one could justify we have that reaction inducing sellers because of this. But then again, when you look in the five, you see what we react off of. So that's what I like to look and dissect what price is actually reacting off of because I don't want to. Why is this person on like two different devices? And I just admitted him. Whatever. Whatever. Okay. Yeah, I like to look at what price is actually reacting off of. It just gives me clarity on why this move is happening. So that's why I would target that. Can you briefly talk difference on extreme confirmation, continuation, Da Vinci entry differences, not seeing no other. Um, okay. As far as the gold entry that I went over earlier, I mean, sometimes an extreme entry is a form of an aggressive direct entry, like here. If we go over this one again. So remember how I said we don't want to be selling from these highs because we've induced sellers. Just giving a framework of what we're going over actually. So respect that area, induce sellers here. So if we look back, you see how this was an extreme entry. I said that we can take this entry two different ways. Once this low's taken, get your conservative entry, just in case, there are times if we over refine that we will miss entries. I talked about that in the last webinar, or the last case study actually. So if you're a person that, you know, you're a little bit more busy, you tend to take this conservative entry just because of the fact that, you know, you don't want to miss it. Or you take the one that I took because I'm okay with missing a potential entry. But then again, I was able to capitalize on waiting for the inducement low to be taken. So here's your extreme. There's not really a difference. Sometimes it just depends what scenario the market gives you. Direct equals extreme. Not in a sense always. Direct entry just means as soon as the liquidity is taken, you take the entry. That's what we mean by direct entries. I say it's aggressive because, in my opinion, there's not as much confirmation as there is in a regular confirmation entry. Continuation, this is a form of a continuation entry as well, because look at where we're priced at, our positioning. Here's our positioning. We're taking a continuation entry into the highs that we induced sellers from. So we've induced sellers from there, continuation up. So I think you're overthinking it a little bit. Da Vinci is just a way that we categorize our A plus setups. Could you show confirmation entry once more, please? On YM. On YM, I actually don't look at YM price action. Um, we can try. So I'll try to find something for you though. Okay, so here's what we got. YM is a little bit, mm, this price action is a little bit more complex than NQ was. So we take in the high actually. So we've actually induced buyers. We've shown that we've induced buyers. However, NQ didn't show that it induced buyers in a way that we were confident in, as far as it wasn't as clear as this. So we then induced sellers by taking out some sort of internal. Me personally, I don't think YM was the cleanest price action to take an entry from. Just my opinion. Here I wouldn't have taken anything below here because look at what we do. Remember how I say I like how we respect it first and then. So notice how we've taken the high first. We've taken the high first, then we've taken the low. Not invalid, but lower probable for me. So I'd stay away from that. I think there's some sort of, is there some, let me see if there's something in this price action here. So let's, 1 minute. All right. Okay. So if we want to see price above here, all we need to see is price induced sellers and then find some sort of entry. Okay. So we get something like that. I think Marco ended up taking this entry. So we induce sellers here. We're respecting the high and look at what we do. Very, very intricate price action, but it's valid to the system. We take the high. So notice how this low comes, it comes low, and then this candle taps that candle's high. So we induce buyers, trap them, all while respecting the inducement low. As soon as the low is taken, entry. So that's a way of taking a confirmation, which is also a continuation trade. So you can target the highs. RR is not really there from here to the highs in general, but if you had a forecast of price coming to these highs here, you were able to capitalize on that. Essentially where sellers were getting induced from, originated from. So you could target that high, gives you a 4 to 4.4 R. Would have been a nice trade. I'm not going to say it's realistic to take your trade all the way here, even though we have liquidity above there. So it's not wrong. It's not, I'm not going to say it's unrealistic to target this, but it most likely unrealistic for me to target this just because of the fact that if I'm trading on futures, I don't like to overextend myself waiting for this much of a target if, you know, I'm also trying to make a profit. I would like to take more partials. So I think that covers most of the week. The week wasn't really that fruitful, guys. Not gonna lie to you. This was a kind of a slow week. Kind of a slow week. I kind of stood clear most of the time. I didn't take a trade Monday. I didn't take a trade Wednesday, but Tuesday and Thursday definitely provided for me. So I'm happy about that. Also, yeah, let's see. Hopefully we can get some better price action next week, guys. Pretty short webinar. I'm only because of the fact that the market didn't provide as much opportunity, but I hope you guys gain some value from it. I try my best to articulate myself in a way that you guys would understand because that's how I understand and that's how I learn. So, before we wrap it up, I just want to let you guys know that, I appreciate the feedback, the positive feedback you guys give me. And apologies again for, the technical difficulties on my end. I do need to upgrade PCs so I could potentially, start providing better content for you guys. So just bear with me until I end up getting a new PC. I'm kind of in the process of also moving house too, so I'm not really in the aspect of just blowing my money at the moment. So just got a lot going on. Don't buy Windows and Microsoft. Yeah, my PC well, not my PC, but my monitor is currently a Windows or Microsoft, whatever you want to call it. But I'm gonna do my research on it because I'm shit is not cheap, so I'm just not gonna impulse buy. But apparently my Mac just isn't able to handle OBS anymore. Unfortunately, it was holding it down for the last couple of months, but it is what it is. You know, thank you guys. I appreciate y'all. Um, I did record this. I did record this, so I will try to have it up for you guys. If in any case it didn't record, then that would be so unfortunate, but I would end up making a case study for you guys. So it is what it is. But I will see you guys soon. Have a good one and safe trading.